Hello, 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 hello. Welcome to this is a market update. This is today is Friday. It is July 7. It is 12:54 p.m. I wanted to do this quick market update here because there's something here that is worth to show. This happens. These things happen all the time. This is about market dynamics here. What what we have in the morning, the market have this. We have the news release, unemployment number, non-farm payrolls here, which gave us an upside spike. I spiked to the upside first, but the market opened below the spike, which is a negative sign actually, right, for the market. We were talking about that, how hard it is to, when this, for me, has been especially hard to trade this kind of environments where where the market opens inside the spike, right? In this case, the spike was rejected, but the market was coming. Context is everything. The market was coming from a short covering day. From a short covering day, the second half of the session looked like a short covering day, and then accumulation of volume here, which adds to this volume down here. That part of the volume was, I don't think this, but rather this side, the overnight was liquidated here. And why I say this, it remained here because there was a volume here in this level here. Volume started to accumulate here, and once this area was taken yesterday, this was used today to buy. At this part of the trade, this part of the session is very hard to identify, or you have to be very seasoned or experienced trader to do this kind of trading here, right? When the market, but there is some tails here that the market is giving to you. It's giving you. The first thing is the market has no excess in the high, right? We have A, we have B here, plus K and L from yesterday, which give us 4Y, a 4Y high here, which is very questionable. Well, there's no excess here on the upper side. And to add context, adding context, this was, an overnight, very emotional overnight here, liquidation of the weak loans that were here, liquidation here, right? That we have the gap there, very prominent also overnight POC from this day. The thing is how you get in here, right? How you get these trades. It is not just the matter that the market is trading now high, because this is a risky trade here, because the market was going to the downside. Market is going to the downside. Market is lower, it's trading lower. There's a rebalancing going on. We talk about the scenarios, the potential scenarios that could develop after this, or during this, or the next week, because we have rate decisions, earnings season is starting, and rebalancing of inventories can be in progress. And notice that today in the morning, one very popular trade that you have to understand is rebalancing of overnight inventory. That happened here. As a continuation of the spike to the upside. This spike to the upside removed the weak loans and then traded to the downside, took the low out, which made the market short again. Okay, this spike to the upside removed the loans, and opening down here actually opens back again down here when the market is short. But at this moment, I'm very hard to do anything here because it's held back. Opening at the center of the range is could be very it gives the market increased odds of being a rotational market with high auto chop again. The exception is when the market single print its way out of the range, which I almost did, right? It just stopped one tick for taking the high, right? And then liquidated. This buying here was complicated here. I don't think I could have been able to take this low unless you are very experienced. You have experience in the market. You see what's happening here. But I don't think this is the only trade here is the breakout. When the market finally take this high out. Take this high out. You have location here. What is your stop? Yeah, as soon as the market come back to or inside this range, it means that the trade is not good. No, the market's telling you this is not good. Anywhere in here, right? Could be this area. But the idea is when the market takes this high out. It's not always like this. We have to understand the context of what's happening now. Market is coming from a long liquidation here. There's a big gap here. Big gap here. After what? News, right? News release. This is trading the news here, and when things like that happen, it's not rare to see this kind of reaction just after. It is what is happening here. This is a short squeeze again. Shorts are being squeezed again. Okay, the context again. We talk about in the morning everything because this volume was very low. It actually is increasing. Right now, that has re-entered this range. Has increased. This period has high volume here. Shorts finally throwing the towel here. Right. This could be the end of the movement, by the way. All right. But the thing is, right now the market is getting super long again. It was super short and now it's extremely long. Okay, it is extremely long. If there is going to be something to the downside, there's nothing here holding this market. The same situation that we have when the market has this gap to the upside, it is the same situation we have now. Now, once the gap was closed, and now in regular trading hours. Okay, there's nothing here that holds this market. What is the volume? Volume is low. Whatever happened today, we were talking about this in the morning, I will doubt if the volume, anything to the upside or to the downside, will be doubtful, will be questionable if it doesn't have volume. This looks more like short covering here, shorts being squeezed. Again, it's Friday, end of the week, a lot of things. It happens more often than not. Now, the upper side, what could be the potential destination of this trade? Now you have, for example, you have your opportunity here, right? This is location. Now, many times you will see this kind of breakouts, but breakout fail. It just fail right away. The different thing today is context. Right? You have to add context to the trade. Remember, we were talking how this market is different, was different. Right? There's a really high volume here in yesterday, right? And the buying side and the selling side. Looking for potential destinations. We have this area here between the 483 and 85. Why I had that area? Because of this volume here and this high volume here, and overall being an area with high volume when the market break, and also being POC. What is POC now? This could be the potential destination of this trade. This could be an area where the market can find sellers, right? So right now, the market, this part of the trade, clearing this high is over. This is another trade now. Once the market re-enter, there are two trades here actually, right? To monitor for continuation. This non-revisited prominent overnight promising, which is is history now, coincided with the low of this 1, 2, 3, 4 day range, which include the holiday, right? Which is kind of the only, I would say, only 2.5 days here, but re-enters this range. Next level to monitor, closing the gap, which is more important actually. Closing the gap is more important than re-entering the range. Okay, now there's another trade here that could start here. This trade is over, right? Enter here, monitor for continuation, keeps going up here. What I will use here is rebalancing, re-enter balance here. My bad, not rebalance. Re-enter this inside day here. I'm not considering these 2 days, just this one and this one, because these are full trading sessions. Okay, the upper side has, look how close these highs are. 1, 2, 3, 4, right? Can it reach 4,500? Who knows? There's plenty of time. We still have 4 more periods, but this would be absolutely crazy if this happens. Can it happen? Of course it happens. What happens is momentum is a crazy thing. That momentum, when you trade momentum, traders don't add context to momentum. Okay, re-entering this range here. First thing, re-entering this range, this 3-day range here, targets the opposite side. That's one thing. Right? That's one trade. Okay? This could be going on right now. The second trade is re-entering this inside the range, which targets this upper side. Okay? Can you see how it flows? How does the flow of the trade keeps going? If you have taken this trade down here, the breakout of this, and I was checking this as an attempt to close the gap. Okay, this is a big gap that we have to the upside, but it's a gap that closed an even bigger gap. Okay, this gap was way bigger than this one. This very emotional market here. What's going on here? This looks more like short covering, okay, than heavy, because you don't see, or I don't see, volume here. Okay? There's lack of volume here. Absolutely no volume here. It's increasing though. Let's check how much volume do we have at this moment. It was minus 20% in the first period, and now we are minus 10. Okay, but it's still low, right? It's increasing but low. There's something I don't like. What's happening with the bond market? Let's check. The bond market recovering? No, I don't think so. Let's check that. No. Yes, it's inside range. It's inside range. There's a rise on crude oil, gold. We have a rally that is keeping the highs. Okay, this is very emotional market here. This is, I would, and we were talking in the morning how this kind of days, when after especially we have these events, the events that we have the upcoming week, right? When hedge funds start hedging first to the upside, or first to the downside, and then to the downside or to the upside, whatever comes first, right? And at this moment in time, I will consider everything is fully hedged here. Either any short position or any long position is hedged here. Having in mind the events or the potential volatility that the market can have the upcoming week. I would say now this market is extremely elongated to the upside. It's very, very long here. Value is overlapping to higher, but multiple distributions. Just look at this one. 1, 2, 3, 4 distribution. Very, very, very emotional. Emotional day here. This is a short squeeze. What you are seeing here is short squeeze, classic short squeeze. If traders don't add context to this, what may happen is this can keep going higher or trade here somewhere in here, right? Start some rotation here, having the POC of this area as a potential destination to the upside. Right? Then next week you will just continue going higher, continue going higher, continue going higher. All right. The base of the rally is very questionable. Okay. It's held back again of this range. This range held back the center. This one is also held back here. I would just be careful here at this moment in time. Okay, this is very elongated now. This is very elongated to the upside, and the trade can be very well be over now at this time. Okay, if you happen to have taken anything here, this is extremely risky now to the upside, right? This is extremely risky. If you have a long here, re-entering this range, targeting this high, monitor for continuation. We see these areas. Let's put these areas. Let's code these areas. These areas would be monitoring for continuation up here. Okay, this is POC, this is held back, this is value area low, value area high. If you see trading going on in here, stopping here, being sold from here, being sold from here, being sold from these levels, that's short term, very short term trading, very short term. It is extremely elongated now. It's very risky to chase this market. Okay? I'm not saying that the market cannot go all the way up to the 4,500. That's another thing that can happen, right? We can keep. Can you imagine this having another period this long? Okay, let's put the potential destination here from the histograms. Where that is? Okay, let's check. This, I would say, the ultimate destination. Okay. 85, 83. 85 to 83, this area here. And why I did that? Because that's what I did that's why you do your homework before. Okay? You do your homework before and review what happened during the day, what may happen the next day. This is, for example, I'm going to open this in the browser. These are my potential destination trades of today, okay? We have this P formation, kind of like P formation with accumulation of volume here, really questionable low here. Notice this low here, 1, 2, 3 lows gathered together now. I could maybe 4, including if I include this one. But the market may have been too short. We have significant levels that here, down here, and up here. Okay, trading to the downside, I will use this to monitor with the 4,400 as my potential destination, and with ultimate destinations, this area here. And the upper side, what do I have on the upper side? I don't have nothing. The only thing I have on the upper side is this area here. Okay, this area here. That's the only thing I have. Well, it seems so far, right? It seems, well, it's impossible the market is going to go that high. It doesn't seem that hard now. Right? It doesn't seem to be that hard now. Now, it is very important that you do your homework every day. Okay? This is an observation that also we were talking about this in the morning, right? Now it's kind of very technical here, very technical trade here, because market was coming from an inside bar, printed an outside bar, which actually favors the upside, right? Potential destination is the opposite side of the range. In this case, the lower side. I was talking on the lower side. The last week was an outside bar to the upside, coming from a failed breakout of an inside bar to the downside. This part here. Very technical here. Very technical trading going on. Now the market has re-entered the range of the inside bar, but has potential to start a new time frame higher. Okay? Taking previous very low invalidates this scenario. I was very cautious about selling, naming or labeling this as a long liquidation situation at this moment. Could it be? This can be still the case, right? This could be a long, but the short term, right? The short time frame, the very short time frame, was too short. The market could be in liquidation mode, but it has just get ahead of itself so fast now. Very prominent POCs, questionable low, and very mechanical low here. Value area low here and half back here. Okay. This thing also. And for me, this week is very weird. It's a very weird week. And now we have this Monday that traded just half of the session. It has a regular amount of volume, not bad, above 500,000 contracts being traded. But it's I cannot use that. I don't know how to I don't know if to use that as just an overnight add to the overnight, or include that into my daily profiles. Okay, the market was very elongated. A healthy correction was in the odds, and this part as well. The market may have gotten too short in a very short time. I mean, this is in the very short time frame. Too short, too fast, which could maybe the scenario that is playing right now. When you do your homework, okay, the goal of this is with time you will have a grasp of what can be the situation of the market, what is going on in the market. You will start to see potential scenarios, right? You won't think of the scenarios; they will just come to you. And when you start doing your homework consistently every day, every single day, if you don't do your homework one day, you haven't earned your right to trade. You have to do it, because if anything happens, if you do no homework, no, you can't do the mental adjustments. If you don't do your homework, we tend to have some biases, and that's when the bigger losses come. Okay, because we are so sure, so certain that certain things can happen and must happen, because it's too weak, because it's too high, because whatever, right? Because the number is bad, because the number is good, and we don't see the bigger picture, and that's when we get trapped. Okay, now traders are getting all of these longs are out. all of these shorts are out. All of the shorts from here are out as well. Once the market re-entered this range, I think that was it. Okay, now momentum is taking these things to the upside. This is very dangerous now. This is very dangerous here. There could be, I won't be surprised if there is some form of liquidation at the closing, if the market cannot re-enter this value area, for example, right? It's very elongated to the upside. This actually favors the downside. This kind of movements, the market trading sideways here, trading sideways with lower volume or to the downside with lower volume favor the upside. But this kind of movement to me, I think there's some, the odds of a bigger correction are still there. Right? But I am speaking in the bigger time frame. Multiple time frames there are multiple time frames that we need to keep in mind at all times here. Okay, and I think that was it. I just wanted to show you this break here, the context of the trade here. There was nothing here for me, nothing here to be a good to do something here. Okay, once the market takes this high by one tick and then breaks, right? It's bought again at the same area where you have high volume yesterday. Why for me this is important? Because if the market trades through this, there could be some liquidation here of this volume here. But that volume wasn't even touched. It remains there. Okay, so there's good odds that there could be something here, some sideways trading here. But this is something I did not expect at all, especially being Friday, low volume. But if you have the courage to go long here, and put your stop back inside this range, maybe once this market take this high out or this high out here, we finally take this one, because there is a lot of shorts here now from A, B, D, K, L, and M. There's a lot of shorts here. I don't consider overnight trade here, just regular trading hours, and that's giving you the potential of this. Your 10 points is 10 points here is a really good day. If you had 20, it's even better. What else do you expect here, right? And remember, the diffusion model. You will hear that a lot as well. And you have to understand the diffusion model here. You have the diffusion. Oh, my bad. The diffusion model here is just gathering of data, right? You have if this is a trade, if this is any trade, you have innovators in this area, early adapters in this area, early majority in this area, late majority in this area, and laggards here. Which stage of the trade can the market be at this moment in time? Do you think innovators are coming in here? These ones? Do you think they could be maybe early majority or late majority or laggards? I think, okay, my particular point of view for 2 days, just for 2 days, okay, the innovators could be here in this area, right, from yesterday. Okay, a yearly majority down here. My bad, early adapters, these ones here. Early majority, this area here, could be this area. Okay? Why here? You know, this is the cessation of one time frame lower here, the breakout. Okay, and this from here up, we have late majority in this area, and I believe, you know, this part here, what is going on right now, this part here, which is this, this is the laggard stage, which adds incredible risk, really high risk, because momentum, the momentum here is fueled by the shorts here, being squeezed to the upside. Once those shorts are out, the only thing that remains are the buyers, the current buyers. And to keep going higher, there has to be new, fresh money willing to buy here, okay, in good amounts, in higher amounts, big amount of money being willing to buy here, okay. Any hedge funds, sophisticated traders know this kind of movements can happen, and they will be somewhere down here, okay, or maybe even down here yesterday, okay. All right. I think if I going to talk, I don't have nothing for next week. Okay, there's a if the market ends up, you know, closes up here, it will be back inside this range, which targets the opposite side of the range, but the inventory will be extremely long. Okay, it will be extremely long, very weak inventory. I would be very careful to have any kind of biases here. Either way, either direction is not good. I don't think that's something good. Very questionable, the high though, you know, very questionable. If I see accumulation, I would pay attention, special attention today at the closing. If I see any kind of big blocks at the closing. If I see big volume blocks after the close, meaning between 4:30 and 5 p.m., that will be a market showing some interest in keeping the market higher up here, okay? Because there's a lot of long inventory here, okay? I expect some liquidation at the closing, some form of liquidation at the closing. If that doesn't happen, okay, there could be something for next week. One more thing. Let's take a look. The bond market, what is happening in the bond market. Oh, come on, what is this? Where are you? This is the US, okay. The bond market has made a new lows. The 30 years the 10 years have made a new lows. The 30 is right there. Just look at this. Huh? It's very close to make a new lows here. This is quite dangerous here. This is long liquidation here. All of the longs here have been liquidated here. Okay. I expect some form of range here. This will be resistance from now. This will be resistance now. And could be really important for what may happen next. The dollar, oh, look at that. Look at the dollar. Dollar has a big break here. Come on, where are you? I thought I had that. Oh, here, see dollar index. Wow, this is a big break. Okay, just negative actually for the market. Right? This one alone bonds and gold needs to go high. Okay, and notice how notice the gold range. Notice this range, the gold market here. Right? There could be there could be anything happen here. We have another range here. Come on, this is very nice here. Range, this is support. I mean, this is resistance now. The market will have, should have some kind of resistance going through these areas, right? This is stair stepping here, what we are having here. Crude oil is going higher, just in time, right? I mean, everything is playing to the downside here. Can you see? Crude oil going higher. Dollar is still in range. Nothing here. What's happening with the ES range, Nasdaq range? Ooh, we got a big gap on the down here. Short covering going on. And the Russell here. Russell index. These indexes are quite a thing. All right. This is what is. This is the thing about markets, right? Markets just the momentum just got too emotional here. 1, 2, 3, 4, 5 distributions. Still 1.5 hour. I expect some selling happening here. But if the market gets close to this level here, there could be a big spike here to the upside. Because there's a lot of stops here. Stops here. And that is what we have from our homework. Again, right? Homework. Notice there's no excess here, firecracker potential here. This gap has been closed. This is history now. Gap has been closed. The gaps in the lower side remain. 1, 2, 3 gaps. 4 gaps in the lower side remain. Barely elongated market to the upside. I think I don't know if this market can repair or give us a good access here. But the thing is, if the market takes the monthly high, it puts this high and this high on, on site, really close. It won't be a dream, a pipe dream the market can take. It's just crazy things can happen here. And can the market make a new high? I don't know. I don't think so. But, never say never. My personal view is, and this is the thing, right? You need to have your own opinion. Okay? You need to start building your own opinion, base it in your observation. That can't be same as Jim, same as mine, different than mine, different to anybody. But it's going to be yours. And with practice, with experience, you will see, right? You will do the corrections. You will start trading, and based on what you observe. If you don't have experience trading, use really short. Try to minimize your risk. You can use you can use the micros, right? You can use another indexes, like double short or double long. SSO, SDS, or SSO. To try to reduce your risk, right? Or even use the SPY, which trades like a stock. I think for next week, if market closes in here, closes inside this range, I guess my focus will be the 4,500, but again, closing inside this range puts the 4,500 on side again, okay, back in the equation. But with a very elongated market to the upside. Notice that there is no excess here today. Okay, yesterday we have good excess. The market retraced it, took some of this excess back, which is good, but today has no excess. Really low excess here, but the upper side has also, the monthly and the weekly and the daily. Oh, 1, 2, 3, 4, 5 highs here, 3 highs here, 2 highs here, with no excess. Okay, we don't have excess on the upper side. The two scenarios that Jim was talking about in his last webinar, free webinar that you can check in his website, were those ones. Right? This could be just a correction, could be just a correction, and still that's undecided for me. The odds that this could be the beginning of a healthy correction or a deeper sell-off or something bigger are still there. All of that because of what's happening today, because of what is happening here. Now, look at this, no excess at the high. No excess at the high. But the market can be too long now. It's about to take this low here. One time framing has ended. Okay? The rally to the upside has ended here. And this could be some rebalancing, especially because it's late in the day. Okay, it's almost, it is 1:30, close to 2 p.m. Some form of rebalancing also is expected when we have this kind of day. Some kind of sideways trading can be happening here as well. Okay? And that is actually healthy thing. Okay, don't be too excited here that this is going to be the beginning of a sell-off. It can be, but don't get too excited. Okay, especially because there is no excess here at the high. All right. If there's no question, if there's any questions, I guess I'm going to call it a day. I wish you a good rest of the week, a good weekend, good rest of the day. Stay safe, enjoy your weekend, and see you next week. Bye-bye.